Okay, good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, January 15th. Great to be with you guys this morning. Hey, Robert says, good morning. Had a nice little move on the euro this AM London session. Yeah, we're seeing a nice little pop in the dollar, bringing euro down near support. And all the majors are essentially in move or in motion finally. So we'll definitely be taking a look at that. Jay, yeah, good morning to you. Pete, Mohammed, Ty, great to see everyone here in the room. So on the menu for today, we'll hit DXY and Euro, obviously, with the moves that we've been seeing. Kiwi, Sterling, with everything that's going on, with all the Sterling information that's been going on, and headline news and votes and whatnot, I thought it prudent to just highlight the larger picture daily chart. You might have seen Jamie yesterday in the swing update even put an intraday chart on there. Really interesting levels, okay, and where we're turning from today should be no surprise. So we'll take a look at the sterling levels just for observation. Circle back to dollar CAD, Aussie dollar, Euro Kiwi still sitting at support, and gold looking for that triangle breakout. Okay, Robert says no more. I think you mean discombobulation, huh? With regards to the euro, we are finally starting to see a move. So, Rob, let's take a look at that. As always, guys, throughout the course of the session, any questions or trade setups, feel free to throw them on the message board at any time. Here's what we were looking at last night. Before we get into the euro, which finally did give us a bigger drop here, here's the DXY. Y'all remember this chart? We've gone over this many times. I published this yesterday on Daily FX as well. So just for reference, again, we were talking about the divergence that we've been seeing in weekly momentum on the dollar index, resistance at the parallel. Again, this is just a sliding parallel of the 2011 trendline support. So all of these parallels continuing to guide price action. The break that we're seeing here early this month below basic trendline support, basically taking us to the first inflection point. Okay, this is the 38.2 of the pitchfork. Obviously, we saw inflection there. You have the 200 long week moving average. Also, did materialize a close below there last week, but we want to sort of see that hold as resistance. Even if this pops intra-week into former trendline support, channel support, kind of still want to see failure there for the move lower. Ultimately, the big support structure for DXY is 93.90 into 94.09. You have the 52-week moving average, basic trendline support off last year's lows, a 38.2 retracement of last year's range, and the low week reversal close from 2016. Obviously, still a pretty prominent pivot in price. So that's sort of the big picture stuff for DXY on the daily chart, on the weekly chart rather. Near term, you're sitting at slope support. Bring into a line chart. You can see it a little bit clearer. Okay, you're sitting right there at slope support. So sure, we could see a little bit of a rebound here, and that's what we're getting right now. But they own, the more important thing is for us to close below this level to keep the short bias in play. Let me just say it that way. Okay, so the weekly levels are pretty darn clear here on DXY. Daily chart looks like this. Okay, even within the confines of that decline that we just saw, it's still holding within the confines of this channel. Channel support. We talked about that. What was it on? I think it was last week. Here's DXY in the 9th into the close of last week. We talked about the fact that this thing was coming into slope support. This might be the first area to look for a rebound. That's actually what caught. Okay, and we're now testing this region as resistance. Here's the intraday chart for DXY. Okay, so just put a side-by-side comparison. That held as support. We dribbled just a little bit lower, came back through 95.31. Here's 95.77 as resistance. 100-day moving average 96 handle, now at 95.97, a little bit lower. That's basically resistance right now. So the question is, it's only Tuesday. Is this the opening range break, or is this just setting the weekly opening range right below resistance? I'm more inclined to think that we're setting the opening range just below former slope support, right? That in red, now resistance. Again, the 100-day moving average, and all those pivots that we just talked about on the daily chart at this region. So there's a lot to look at here as far as resistance. This is also sort of the first level to look. If we breach above this, I'd expect 96.16, I'd expect 96.23, and even the upper parallel pretty quick. But right now, into the open of the U.S. session, this is resistance. This is the risk. Okay. U.S. data just released is weak. Who says that? Robert? Yeah, I mean it's not a major data print today, so I'm not really expecting it to be anything big. Not going to really take any merits to that. It says, "Good morning, D. Hey, good morning, D. Great to see you in the room." So we're looking to see if the index will fail today, basically, essentially below 96. That's what I'm looking for. I just want to see what this 100% extension looks like, guys. Bear with me one moment. Goes to two equal legs off the low, gives you this level right here at 95.80. We're already through that. Look for exhaustion here. If we pop through, and especially today, if we close above the 100-day moving average, I think you still need to favor the long side. But as it stands right now, I'm looking for exhaustion. Maybe a little bit of a top, maybe a pop higher into the U.S. trade session, just into here to get a tag at the 100, then failure. We'll see. But if we settle the day above this pivot region, you don't need me to tell you that's constructive. Okay, the whole point is how we settle today's close. Draghi at 10 a.m. Absolutely, Ty. Thanks for the reminder on that. Yes, Draghi at 10 a.m. Obviously, the UK, Brexit headlines are going to continue to circulate. Obviously, you have everything that's happening here in the US with the government shutdown and the negotiations that are going on there. There's so much event risk, guys, and so much headline risk. Got to stay focused on price. Stay close to price and react to what price is telling us, because there's going to be things that are going to continue to hit the headlines. Robert says, Mike, the Brexit vote will impact the euro as well, right? It will, Robert. Let me take a step back. That question you're asking, I'm not sure what you're looking for with that. Don't mean to pick on you, Robert, but just to be completely frank with you, it could impact the euro, but how do you want to play that? You looking for that to help or hurt the euro? I don't know. I'm not even going to try to estimate or be clever and think how that's going to work. All I know is where the euro is trading and where that is relation to what price is doing. So let's jump into that. Any questions here on the DXY before we move off? Okay, so here's euro, and this is we covered this last night. I wanted to give you guys a whole update. So obviously, the focus here was a really tight weekly opening range. Remember, we said 115 is the break that needed to validate reversal. The focus was still for a risk for washout towards 1438 and 1407. As I said, if we get into that 1407 level, that's an area of interest for possible exhaustion if reached, meaning long entries. So here's the washout in euro, or what I perceive as a washout. And here's the drop. The low registered just not too long ago at 114.12. So we didn't quite get into 1407, which would have been a nice 618 retracement. Was that the low? I don't know. I kind of wish I had jumped into a long on that last stab there. But at the end of the day, if that is preserved and we settle back above 1440, yeah, look for the resumption. This is kind of the trade that we've been looking for on the euro with this correction off of slope resistance. Again, here's euro on the daily chart, right? No surprise where we turned from. Nice outside candle or nice reversal candle as momentum was struggling at 60. Sort of exactly the area you'd look for a near-term correction. Now, today's close is going to matter for me. Just like we talked about in the euro or in the DXY, on the euro, the yearly open's 1449. So I know that the swing trades got stopped out at break even. It is what it is, guys. At the end of the day, we have to stay disciplined to price. And here we are testing the yearly open. So if we close below 1444, I'm more inclined to kind of dump on the long side here and give up on that trade. But if it doesn't, it might actually still be a good entry. The EU is already backing off today, says Ty. They want money and bad deal in place. Yeah, Ty, I'm, trying not to get too much into the politics of it all, but price has spoken. Here's the near-term chart. And here's what we were looking at early in the week or last night. So here's the break to the downside. Again, 1438 got taken out in a hurry here. And here's the dump right ahead of 1407. I was looking for exhaustion into that 618. Look, at the end of the day, like I said, if we settle back above and stabilize above 1430 into the U.S. trade session, it might be a decent entry there for just a fade higher. Ultimately, guys, we still do need to clear 115 to validate a reversal of sorts in euro. So that's sort of my game plan. Here's the 240 minutes to put things in perspective for you guys. Broader picture. This pitchfork is the same one we've been talking about since last year. And I laugh because it's so funny that same pitchfork is holding. When we added it, especially when we came on the first approach here, there was a lot of inflections through the reference points that kind of made me double guess whether I want to stick with that slope. But the upper parallel pretty darn close to the highs. The median line pretty darn close to what we are now, right? Support or the momentum barrier basically testing a 40 break. Let's see what happens here today. Ideal scenario. Okay, ideal scenario. This low is preserved, or even if we do stab lower just for 1407, that's preserved, and we settle a daily close above 1440. That would give us a little bit more of a conviction rebound play to the upside in euro. But right now, if you're holding shorts, Rob, and I'm assuming you killed it on the euro last night, you're saying you did pretty well. I'm assuming you're on the short side. Watch this support, okay? This level that we're rebounding off here, he says I'm out. Good stuff. I didn't want to explicitly say that was my opinion, but Rob, that's what I would have done. Well done, sir. Well done. This might be an opportunity for a rebound. We'll see how the U.S. Open looks. That low and the way that 2 hour is responding certainly has me looking for a defense of that low into the U.S. Open. Questions, comments, concerns on euro dollar? And keep in mind, again, Draghi will be on at 10. I don't really know if we'll get much, to be quite frank, out of him, but with everything that's happening in nearby UK, you might get something that could shake things up a little bit. All right, so we did euro and DXY. That was number 1 and 2. Kiwi. Here's number 3. So I kind of gave you a whole update on Kiwi last night as well. Remember, the weekly chart for Kiwi is the least sexy, let's say, out of all of them, out of all 3, just because of where we are in slope and how this thing has reacted. The daily chart and the intraday chart are what's more interesting to me. So let me just go back to the weekly chart here on Kiwi. Here's the New Zealand dollar, right? The upper parallel for the pitchfork has been a mess. We've sailed through it on both sides many times. The inflection at the 50% retracement and the upper parallel did hold as support. So I'll bring that up as a decent bounce. And here's the recovery. Key resistance hasn't changed. Still 69.30 into 69, essentially that 52-week moving average. Support, still talking about 67, essentially 66.96, that 50% retracement. And the weekly chart really doesn't leave much here to be desired. I mean, there's not much to get excited about. Daily chart for Kiwi looks like this. Like I said, a little bit cleaner. You got that downside break of slope resistance off the December high. That fueled some acceleration. We made it through the 200-day moving average. We've been straddling the 618% retracement of the decline for the last 3 days, basically. And the only thing I want to highlight is resistance. It's so interesting, guys, how we can pinpoint pivots in price just based on price action. It doesn't need to be a fib, doesn't need to be a slope retracement or anything. Very simple. Lows from back in May. We tested it again here in June. When we broke in late June, accelerated, was instant resistance. In July, was again resistance in late July. It's the same level. Just an objective pivot in price. Here's the intraday chart in Kiwi. And here's how we look. Or here's how we looked last night. Okay, so as I noted, we kind of been straddling the 618 retracement, 66.22. Resistance 68.51, that's the breakout level to give us these top two targets. Support is at the 200-day moving average. That's variable, but still right now it's around 67.95, 67.96. That's support. So look, you're still in that range. You know, gunshot approach for me, I'd actually rather fade a stretch higher for a move lower, and I'd look to reposition possibly for entries down near 67.45 if we get it, or a slope. But from right here, I don't have any exposure on Kiwi just yet. If we get the rip higher, again, like one of these two levels would be, in my opinion, a great fade opportunity. If you're holding longs, anything below 67, 95, basically 68, that's fine. But I'd have a stop just below this. If the 200-day moving average gives out, the weekly opening range gives out, slope support gives out, you're probably going to see a larger washout towards 67.45s or so. So if you're holding anything long sub 67.95, I would put a stop just below that. If you're looking for new entries, again, if we get a drop here and you see failure, stop against that low for the week would be the only way I'd play the long side. More appetizing for me would be sort of an exhaustion on a stretch higher towards the upper parallels to try to fade that trade. But Kiwi, again, at these levels, kind of tricky. You're basically unchanged on the week. You've set a pretty clean weekly opening range low above a 200-day moving average. Weekly opening range high just below a major pivot in price, right? Look for the break heading into Wednesday. Any question on Kiwi dollar? So those were the updates from last night. And last but not least, sterling. So and I think Jamie's on the same page with this, I'm still not a fan, guys, of getting involved in a sterling just because of the event risk that you're facing is, it's unprecedented stuff and it's real high sort of event risk trade. But, the technicals are the technicals. Here's sterling. I want to show you the daily and weekly chart today just because there is just some objective stuff that we should be looking at if sterling is going to either break out or pull back. It's a make or break level, and I hate using those cliches, but it is. Okay, here's sterling on the weekly chart. We talked about 24.33, 24.69 for some time. 24.33 is the post-Brexit 2016 low week close. Boom. 786 retracement of the advance off that post-Brexit close is 124.69. That's where we bottomed out in December. Again, into the close of the year, here's the rebound. First area of resistance just from a slope standpoint, even a little bit higher, okay? You have the basic upper median line parallel or pitchfork resistance, and then a basic consolidation trendline resistance off the highs from October. Right? All basic stuff here. That's the weekly chart, okay? Now, also keep in mind a couple things on the weekly chart. Divergence into support into a trigger break. 1 point, 2 point, call that a break or whatever you want. That's a third point right there. Yes, last week we got the confirmed close above. So everything is poised, but price hasn't gotten there yet. We need to clear this upper median line parallel, basic trend line resistance from October. That's the weekly close above that would confirm a larger breakout in price. Okay, this is completely putting aside any type of event risk or headlines or whatever the heck they come out with these votes. So that's sterling on the weekly charts. On the daily charts is also some very clean and key levels to watch. There's that upper median line parallel, same thing. Okay, this is off the highs just from last year. The 618 retracement from the September decline gets you 29.72. That's going to be my breakout level. Okay, 29.72, that's going to be the level if we give out and we close a daily close above it, in my humble opinion, would suggest sterling has indeed broken out. Also, a couple things to note is that since that September high, momentum hasn't been able to clear 60. Okay, and here's momentum knocking on the door. So if we're able to get momentum close above 60, price is able to close a daily close above 29.70, again, in my humble opinion, that would validate a breakout in sterling. Immediately though, I think the risk is for a pullback. Momentum's at 60, same exact reason that we were looking for the break. You got the 100-day moving average, which obviously on a daily close basis is still respected. You have the 50% retracement of that decline, okay? And it just looks poised for, a possible pullback. I wouldn't be trying to play the shorts. Near-term support and near-term bullish inval is right at the yearly open, 27.54. That's pretty clean. And then obviously on the breakout, you know what you're looking for, 200-day moving average and a larger 38.2 retracement. So look, again, there's nothing to do here just yet. Ideal scenario, sort of this fails or you get a washout that fails ahead of the yearly open, and then you plow through 29.72 to validate the play. If something happens and you get a disorderly Brexit expectation or something completely, if negotiations fall apart, whatever happens with the vote, and you see a daily settle close below the median line, at that point, I'd be looking for a challenge of the lows again, or at least a lower parallel at that point. But, this is the breakout level. Near term, you're heading in some resistance here on this sterling recovery, which is quite impressive. This is what, 3.6% recovery just off of the last, 10 days, 12 days. So levels to watch in sterling. Again, the near-term picture, I haven't even been really following it, guys, because, it's pretty tight, okay? But definitely something to keep an eye on as we get through these negotiations coming up. Just to put some color there on you for you, if we do correct lower, 29.72 is still the breakout zone. And look at that, the weekly opening range. Is right there with slope support. So even if you do feel compelled to do something on near-term structure, watch this setup here. Again, exhaustion into this parallel. It's 29.72 max. Pullback, 27.40 is actually at 38.2. Ultimately, if we do get a larger pullback, I think that'll give us a better opportunity to try to get back on the long side. Obviously, the yearly open comes in right there. So this would be sort of an ideal scenario if it washes lower. But we'll have to see how this pans out. Good event risk on tap today. Ty says it's really going to be interesting if the market sees Brexit rejection as positive or negative. Yeah, Ty, I completely agree, man. I think it's the whole concept of whether it's going to be a disorderly. Well, I guess, yeah. I mean, if we take it back to whether they reject Brexit altogether, I highly doubt that they're going to go that route. It's going to see. Yeah, it's very interesting, Ty. It's very interesting. And for any of our clients or subscribers who are in the UK, we're always interested in your opinion. So a breakdown of what you see on the ground is always helpful. Last night in the update, I do have a couple of contacts, good friends of mine, traders in the city. They told me these guys were sort of the go-to, most important Twitter handles to follow. Again, I just wanted to throw it out there for those of you who are trading pound. I'm not really interested in following the statement by statement fundamental sort of play by play. But if you do feel compelled, I'm told by my Brit friends that those are sort of must follows for Brexit. So take it for what it's worth. Any questions on sterling? Interesting times, and I think we're going to get a lot of play in this pair over the next couple of days. All right, so previous update, we went over dollar CAD, and some of these majors, man, it's just been disappointing because of the lack of volatility. The levels are still pretty clean. So number 5, here's dollar CAD, what we look like earlier in the week. I noted on the Sunday Open that on Friday, um, you saw a pretty nice outside reversal, or not an outside reversal, but an outside day. Okay, off these lows that we were looking at. So here's the intraday chart that we were looking at into the Sunday Open. The daily chart, crashed down. We talked about the fact that it was a massive, massive multi-percent drop, double-digit drop almost, I think, right? 3.5% or so, yeah, off the highs. And then all of a sudden, you saw this big sort of divergence and price action, lower low, lower low, lower low, lower low, a series of higher lows, and then that failure to hit that 100-day moving average, which is moving up a little bit. With that outside day on Friday, kind of had me looking for a possibility of a recovery. The recovery hasn't seen much, but neither has it failed to the downside. So what do you do here? Well, I was looking at this morning. Momentum sort of basically failed at 60. You're seeing this slide back. It's not really sort of a rejection. On these types of trades, guys, I kind of just want to sit it out and see how it pans. Remember, the broader picture. The broader picture for dollar CAD is this. Okay, we came off of huge resistance late last year. Huge resistance. We talked about this. The pullback had us only looking for a tag of that trend line. Once we broke through that last week, the broader risk is still lower. I was trying to say in the beginning of the week was, look, we're at support. You made a revert outside day on Friday. Look, if you see some sort of recovery, look for failure ahead of the 2017 Open 34.35. But essentially, you're still looking for that deeper cut. 31.20, 31.19 is a 618. Huge support barrier down here. Basic trendline support off last year's low. 52 week moving average. 200 week moving average. All converge right down here. Marco asking, can you afford as a trader to be compelled, quote unquote, to take a position? Marco, absolutely. What do you mean by that? I know. I always say that because a lot of times you'll have conviction on a position that I might not be following. And so I'm going to offer you the levels if you guys are looking at it. Same point, sometimes I'll be looking at a position. Bear with me one sec, guys, that you might not be looking at. I need to make sure this PC is plugged in. Bear with me one sec. Sorry about that. Okay. Guys, can I just get a quick sound check? I do apologize about that. If you can hear my voice, Robert says good, Ty says good. I am so sorry about that. Um, yeah, the laptop wasn't plugged in. I'm using a new setup here in the office, so I do apologize about that. We are back. So, where were we on dollar CAD? So remember, the broader picture is in fact for the reversal to head lower. The whole question is, do we get the pullback towards the 2017 Open before we move lower? But ultimately, this is what I want to see on dollar CAD. So when that brings us into the intraday charts, well, the weekly opening range has been kind of pitiful. There's no play here. What was I talking about right before I lost? Yes. So Marco, did I answer your question when you're asking can you afford to be compelled as a trader to take a position? Yeah. There's a lot of times we might not have necessarily similar views on a setup, or there might be a setup that you're in and that I'm not involved in. He says, I was just kidding. I think it's a good question, though, Marco. A lot of guys, come in and they want to only take what are you only trading? I mean, a lot of times there's going to be opportunities that I don't take, that I miss, that I don't see. I try to get as much as view as possible of things that we're tracking, but um, Aurelian says, sorry, did I miss Aussie? No, Aussie's right next, Aurelian. You're right on time, brother. So that's sort of dollar CAD, guys. There's nothing to do here just yet. Bottom line, I would love to be. I'm more inclined to be on the short side, but I can't, get short from here. If you're holding shorts from anything north of 133.65, I'd have us break even stop and look to see if you can't get that 31.75 level, that 100-day moving average. If not 31.20, which is the 618. And remember, those are bigger levels in price, right? Even on the daily chart, you start to run into slopes, some slope down there. So ultimately, I do want it lower. If we get a bigger recovery here towards 33.65, specifically 34.20, these are both levels of which I'd probably look to get back on the short side if I'm not involved. But Aussie, Aussie's just been, what's the word on this one? Aurelian, it's a test of patience. What is the confluence number, please? Ty, for which one? For dollar CAD? 34.22? 34.35? This is the big zone. This is bearish invalidation. If we were to get through this Ty, I think that you'd probably be looking for a resumption for the broader uptrend. With the same respect, confluence support. This whole area is locked up, basically from the 100-day moving average down to the 618 retracement. So 31.20 and 31.75, both major key levels here. Make sense, Ty? So this is highlighting 31.60 because it's the low, but focus on the slope here and focus on this region here, these 100-day moving average and that 618. He says yes. Okay, right on. So Aurelian, Aussie. Yeah, so Aussie's been like, it's been a love-hate relationship for me. You guys know where I stand on this. We've been looking for the turn lower after this insane, radical stretch. I started shorting it on the test of the 100-day moving average. We got a decent pullback, and then we got stopped out. I tried it again to close last week, took a break-even stop on that last spill. So there's been nothing to do here. The weekly opening range is absolutely pitiful. Look, I'm not going to try to fight this again until I get a better positioning. Meaning, either you get the rally into 72.75, 72.54, this confluence zone right here. It's represented right here on the intraday chart as well. It's a 38.2 retracement of the entire 2000. I guess it's 2018 and the low that we made into the open of this year. But that whole 2018 decline. It's a 786 retracement from just the near-term decline off the December high. And it's also that 50 line, or the upper 75% line for the pitchfork that we added off the lows here. So there's a good amount that's there. Basic slope that we've been following kind of lands on there. I don't know whether you even want to look at this anymore because it's kind of like making a mess of things. But ideal scenario, you get one last spike or stab or wash out into this region and it fails. Pullback level 71.45 and that 618 and that October low day close is still 70.86, both levels of interest. So look, this is sort of like your hourly chart, right? So this is a near-term bull flag All right. It could range, even go for another stab at the 100-day moving average, blast off, hit 72.50, 72.75, that key zone, failure there before a larger washout. And then you look to reposition on the long side down near the yearly open if we get down there. That's sort of my favored, let's call it, play here in Aussie. I just think it's too simple. I just don't think it's going to crack lower from here from straight on. It needs to make another run. Any questions on Aussie dollar? Remember again why we've been looking to play the short side on Aussie, longer term picture. Here is the weekly chart. It's really important, guys. Our multi-time frame analysis approach is really what helps direct us and give us expectations of what we should be looking for. 72.40. Yeah, it's a 764 retracement. I mean, I can show you in the other chart in a moment, but the most important thing is even if we, get rid of everything here, look at that slope, right? Look at that slope. It's the pitchfork off 2017, 2018 highs. Upper parallel, sure, we gapped above it, never closed above it. The median line, sure, we broke below it, but look at the reference points once we did. Same exact gradient, same exact slope. Okay, so all I'm saying is, this is the initial area of resistance. I mean, if you're going to get a move after this kind of massive outside weekly reversal off of multi-year lows, this would be the pullback area. Inevitably, I do like a larger breakout in Aussie. First things first, though, you're at resistance. Any questions on Aussie? Aurelian says thanks. Anything specific on this, Aurelian? So, I kind of would like to get one last breach into that 72.50, 72.75 area to kind of see exhaustion there. Remember, where is Ty? You're in the room. Remember Ty last year, the whole decline, 73.30? You remember that level? We were talking about it for months, I remember. It was the 2017 lows. It was a huge pivot in price. We landed there. We sat there from July all the way till mid-August when we broke below. It was key resistance. That's still resistance and now converges on the 200-day moving average. So your breakout levels are pretty clear. Your initial resistance is pretty clear, and so is your support if we do make a low move lower. 71.45 median line, just a little bit lower, 70.80s. Okay. Bullish invalidation. The only thing that would put me back on the resumption trade, the move lower in Aussie, would be a move below the yearly open. Questions on Aussie. Later this afternoon, you do get Westpac consumer confidence info or data out of Australia. Not really a major market mover, but something to be aware of if you're heading to the Aussie session. Aurelian says, thanks, I'm fine, all right. And Robert says, nice trade. I mean, Aussie's my favorite. Out of all the years I've traded, I've probably put more trades in on this pair than any other asset. So yeah, I hope to get something in on this week. Okay, and that is number five, number six, number seven. A quick note on Euro Kiwi. I don't know if any of you were involved in this one. Hey, how important is the dairy release to Kiwi price action? Is it a price mover or more soft? Rob, it can be a larger mover when the commodity correlation is tighter. So typically, obviously, New Zealand, a big exporter of dairy products. When you see large swings in dairy prices, a lot of times that'll hit or impact Kiwi price action for sure. I love where your head's at with that. But that correlation, in my humble opinion right now, is not something that's so prominent where I would necessarily look to take cues off it. It's definitely a market mover. It's one of the largest imports, so I'm always aware of when it's happening. I do know that it's on tap, but is it going to prompt a trade? Is it going to prompt a move? I doubt that, just based on where the corollaries are at this point. Does that make sense, Rob? He says, cool. Okay, good question. All right, Euro key. So the other thing, I just wanted to touch on this one because we've been following it, but so here's Aussie again. Ideally, we stab into this and fail. This really stiff uptrend is kind of what we've already started to dribble below. That's this line that we've kind of messed below. So I've removed it, but you see the picture here. You see the picture here in Aussie. Euro Kiwi looked like this. And we started off the week sitting right at support. 67.45 into 67.65 was a nice fib confluence region as the 100% extension off the highs, 2 equal legs lower, and also the 50% retracement off the lows. We rebounded off that start the week. So you actually got a pretty decent level or pretty decent play just for kind of bounce early in the week. Here we are again testing that level. And on a closed basis, I guess that brings us back to a 60-minute. You know what I mean? I was looking at this when I first walked in this morning. So technically it did close below by a pip or so, but we're not out of the woods yet, right? We're not out of the woods yet. And, on the hourly chart, this is suggesting that you're seeing some divergence here too. So I'm kind of sketched out about trying to get on the short side here. Well, obviously from these levels, you can't do anything, but might see a little bit more of a rebound from this level, especially if Kiwi pulls off. So another one where, like, if we were talking about Kiwi dollar earlier in the session, right? Another one where if Kiwi does break below 67.95, that would be a play for me that I would be interested in playing Euro Kiwi to the upside on a Kiwi pullback play. If Kiwi breaks higher here, that's where I think Euro Kiwi would get the move lower first on Kiwi strength, right? And then you'd look for 166.60 tap. That's the 618. Before resumption. So you guys know what we've been talking about this trade for the last couple of weeks, or I guess since last week, I should say. And ever since this rebound here, we said, look, we're looking for another low, right? If this is 5 waves up, which it looks to me like it could be a very clear 5-wave advanced pattern, I'd want to see this take shape of 3 waves. I'd want to see 2 equal legs. All of that corollary, or all of that would suggest 67.45 holding support. And that's basically what we're doing now. Okay, so this is one where I'm looking for some support. If we get Kiwi strength, okay, and Euro Kiwi breaks 67.45 on a daily close basis, I do think you have a good 90 pip move down to 66.60s. That's where the 618 would be. But as it stands right now, this is where the pullback should find support if this is corrective. Make sense? Any questions on Euro Key? No changes to any of those levels from Sunday. You're sitting right at that key support barrier that we highlighted at 67.45, 67.65. All right. Last but not least on my list is gold. I'm gonna keep driving this one home, guys, all week long until we get a resolution to this number 8. Gold is at a big level. It's also making a lot of headlines, and there's going to be a lot of talk, especially with what's going on, both on the Brexit front, on the government shutdown front, on the any way you slice it. Okay, we're trading at pretty major critical levels here. So. Here's the intraday chart for gold. We've been talking about this consolidation structure that we've been looking at for weeks now. The weekly chart, I guess I should start with that, is coming into a radical area of resistance. Remember yesterday, I don't know if you were in the webinar with us on Daily FX, guys, but we were talking about the fact that I've adjusted the slope here on gold. I don't like typically to do these half, cockeyed slopes where we're not really using a major reference point for one of your corners, but the slope has just been ridiculous. Both on the pivot for the median line, support, break, acceleration, resistance, break, acceleration, and on the extremes. So basic trend line resistance still holding here. Last year's open is 1302. That's the level I'm going to need to break on a weekly close basis to suggest that we have, in fact, broken out of the multi-year downtrend here in gold. Near-term support, 52-week moving average comes in at 1267. Larger bullish invalidation for the broader uptrend off last year's low. Unfortunately, still all the way down at 1236. You got your 200 long week moving average. You got the former swing lows of December from 2017 and you also have basic slope support off last year's low. Okay, topside breach above 1302, 1321, and the high week close for 2018 gets you 1350. Larger from 1,000 feet up, right? I guess this you could say this is from 10,000 feet up for gold. Daily chart looks like this. All right, there's that same slope that we're looking at in the daily chart. Really nice as far as resistance. The monthly opening range remains intact. Point in fact, the monthly opening range is well, I should say we're in the 15th of the month, guys. The entire monthly range is comprised of just the first 3 days of trade. By January 4th, we had put in the monthly opening range, and we've been trading in that range ever since. Just so happens that that range is taking the shape of a near-term consolidation with a series of lower highs and a series of higher lows. Look for the break. Okay, look for the break. Even if it resolves to the upside, we still need to get through 1302, okay, to validate resumption. If it breaks to the downside or it resolves this consolidation to the downside, you're looking for a move back to the median line. You're looking for a move down to this region right here. 1270s, 1275 would be that parallel, basically this confluence region here. Again, a basic 236 of just the advance gets you 1265. So I'm expecting big stuff from gold this, if not this week, next week for sure, but I do think you get it into the close of this week. On its face value, guys, it's got a very clean weekly opening range. A little bit farther out on its face value, it's got a very clear monthly opening range, right? And the levels of which what we're trading from a structural standpoint are pretty clear as well. So, man, expect fireworks in gold this week. I think we're going to get it. I think you were going to get it. Pete said, would you short 1302? So, Pete, depends on what kind of trade you're looking to take. On a scalp, or like, I hate to use that word to be honest with you, but on a near-term position, if we spike into this region, yeah, I would be actually interested in getting a short scalp against that. Understanding, Pete, that that's a pivot. And a daily close above 1302 really changes the picture for gold, in my humble opinion, really more aggressively bullish. But on an initial approach, yeah, I think I would be interested in a short there. Remember, Pete, again, the only other thing I want to note is that the broader trade, the broader trend, in my humble opinion, is long. So I'd be more inclined to use a larger pullback to jump into a long position that I can sit in for a couple of days or weeks. From a near-term standpoint, absolutely, if we get a stretch and a spike into 1302, here's the thing, Pete, it would need to fail there pretty quick. If we breach this triangle and we get up there and we kind of sit through it, or we spike through and we kind of sit there for a while, at that point, I'd be a little hesitant. If we're going to fail at 1302, I want to see, exhaustion, classic exhaustion. I want to see divergence. I want to see very little tolerance up there. I don't want to see price stick to that region. I want to see rejection. Does that make sense, Pete? He says, great, thanks, right on. Good question. Good question. And yeah, that's, basically how I would be looking to attack it if we do get up there. Okay, so guys, that's everything I have on my end. Do let me know if you have any other questions or trade setups you want to review. Ahead of the before we close the session out, obviously crude, people have been talking about this trade, and it's going to continue to make headlines. You guys know where we stand on this one. I do think that 1445, 43 specifically, but 1445 is still the barrier, my line in the sand. I think that's a big region. I think the low that was made was pretty important. So I'm more inclined to be constructive on the broader term. Near term from here, I wouldn't be surprised if we drop down towards the 47, 45 barrier again. But this is where I want to see hold as support. Major key resistance is still 55. That's a level that we've been talking about for a while, 55.50s. Ty says, gold is not a DXY issue. It's financial and political instability and global economic weakness, says Ty. Good question, Ty, I guess, or good comment, but where would you get, I'm not sure what prompted that. Very rarely do you see me make a judgment on gold just based on what the DXY is doing. So I don't necessarily ever correlate the two as a causation. But if we do get some sort of near-term recovery in the dollar, that would be the pullback in gold, right? Wouldn't necessarily have to correlate that way, and I completely agree with you. And that gold at this point may be taking a larger cues from definitely all the unpolitical or the political instability and geopolitical instability that we're seeing. Obviously, this U.S. government shutdown thing, guys, I know a lot of you might not be paying attention outside the States. It's going to become a bigger deal the longer it goes. We're already on record. This is the longest government shutdown, partial, I must say, government shutdown in the United States history. So the longer term implications of the economy impact or the economic impact, may not start to really resonate until later. If the S&P breaks the horizontal resistance, is that a good time to start looking for yen short side setup? Hey, Robert, let's take a look at the SPX. So, this is the weekly SPX log scale. This is the pitchfork that we've been talking about. I've been talking to you guys about this from the 2009 and 2011 low, high, low. And you're asking what now? Ty says, I'm a big bull on both the DXY and gold. I have seen them go up together many times. The Dems picked the wrong hill to die on. Nice comment there, Ty. And absolutely, I don't think anyone can disagree that there are certainly times in history where gold and the dollar move together. Absolutely. And those times are actually during really, really, interestingly enough, times of risk on, risk off. We talked about that briefly yesterday in the webinar, but the dollar will catch haven status, and so will gold. So certainly, if we have a real aggressive market risk-off sentiment move, you should see both of those catch a bid. But Robert, for the SPX, your question is, if the SPX breaks horizontal resistance, is that a good time to start to look for yen short side setup? No, I don't want to say. I don't want to correlate the two. I'm not going to touch that, Rob. I'm not going to correlate the two. You know how I stand on dollar yen, my humble opinion on dollar yen. It's the abomination. I have so much respect for this trade. I don't ever take a dollar yen trade based on any type of corollary trade. I understand the implications with risk sentiment. Hell, I even understand the implications with yields. And definitely the yields will have larger impacts on yen, obviously. But I don't want to say if SPS breaks, I want to do this on yen or not. All I can tell you is on dollar yen, guys, it's the same level we've been talking about. And I'm not even exaggerating. Since December, 107.83, 108.42. I recognize that right here into the close of the year open of this year, we smashed through it, but we defended last year's low and we never closed below. Here's the low. Here's the line chart. So, Rob, not to sidestep your question, but instead of saying if the SPX breaks, if dollar yen breaks support, I'll like shorting dollar yen. You know what I mean? I try not to connect too many things in my head, guys. Trading is difficult enough. Trying to put too many stipulations and too many corollaries and connecting all these dots to justify one trade, I think can lead us down the rabbit hole. So for me, look, dollar yen's at support. We've been talking about this level since the start of the year. It's boring for me. I haven't talked about it in the intraday reports for that very reason. Look what's been going on since the start of the year. I mean, what the heck do we do with this? I don't know. I don't know. This could be a near-term consolidation before the last terminal thrust. It could be, the rebound test of resistance. This looks like it drifted higher, but it's not really the breakout we perceived. So it's the same exact, wait and see type of approach. 109.60, 109.59. This is your monthly open, yearly open, 50% retracement of last year's range. That would take you back above slope. If we get through that, I'd look for, resumption higher, all things held constant. Yeah, if we get a decent rally, I'd still want to sell, but not here. You're at support. You know what I mean? You're at support. Dollar yen's just one of those trades, Rob. You're going to see me highlight it when I have a really exciting setup that I want to get involved in. But other than that, tremendous respect for it. This trade chops up more people than you can imagine. I remember sitting on the trade desk for years and years and years, just seeing the stops get run on dollar yen. There's a reason I call it the abomination. It's earned its title. It's earned its title with a lot of time. No deal Brexit is a disaster for the EU and its banks, says Ty. Well, hopefully we'll see that manifested in price action. Um, and again, I don't really want to get into the implications of what the geopolitical risks are here, Ty, right? Because look, there's nothing, and this is the only thing I'll say, Ty. I love how you really do have a closer pulse on what's going on with all that stuff. But has anything really changed since December to now? No, right? But guess what? Sterling's 500 pips higher. So as a trader, as someone looking for an opportunity in the markets, all this noise and headlines and oh my goodness, Brexit this and Brexit that, and last 4 weeks doesn't really look like the markets gave a damn, right? This thing's been ripping higher. So, and I don't want to like trash the implications and the human, toll of what a Brexit will mean for the British people. I'm all about that, okay? But I'm talking to you from an investment standpoint, not investment, from a trader standpoint, Ty. Make sure that we're just paying attention to what price is doing. At the end of the day, sterling's at resistance. The vote might go well, the vote might not go well. I'm looking at sterling coming off resistance. And guess what, guys? We talked about this early in the week. We talked about it in the webinar yesterday before anything happened over the last 24 hours. So we make sure that's why exactly, Robert, you took the words out of my mouth. We trade what we see, not what we hear. Okay? Is the EU that loses real Brexit for UK is positive? So Ty, if you're talking about the geopolitical, I agree with you. For the UK, and again, I don't want to rub anyone the wrong way, guys. This is just my humble Boutros opinion. I think in the long term, Brexit for the EU people, for the EU nation, probably is going to be a positive. Absolutely, giving their own solidarity, giving them flexibility with how to approach monetary and fiscal policy, not being tied down to EU regulations. All of this will be positive. And you're absolutely right. It's one of the powerhouses of the EU. So the UK Brexit, the EU is going to lose in that scenario. Which one's going to be the bigger loser in the process of the decouple, Ty? That's the question, right? That's the question. And I think that's the whole thing with this Brexit is what does the decoupling look like? Because we haven't had it. It's a precedent. And what does that mean for other nations within the EU that might run into problems again? Don't forget the sovereign debt issues that we had years ago with Greece and Italy and Spain. All that's going to come to the forefront, guys. All of these issues, these structural issues, as it were, are just fading to the background. They're still there, right? And it's going to be certainly, I think, something that will come to the forefront again. As it stands right now, everyone's just looking to see how this Brexit, how the decoupling mechanism, the process looks. So that's all I'll say on that. I'm always interested, as always, guys, to hear your opinion, your take on those geopolitical events. So always feel free to share them here. With that, it is 9:30, so I'm going to go ahead and wrap it up here. Guys, remember tomorrow on tap, as always, Jamie with the midweek strategy webinar, and I'll be back on here with the intraday webinar on Thursday morning at 8:30 Eastern. We'll keep you updated on SB Squawk with anything major that comes out in the headlines, but keep your eyes really close to this price action that we're seeing and look to see if the dollar rally starts to fizzle out, from a little bit towards the latter part of the week here, and especially if we can hold below that monthly open 100-day moving average. Best of luck trading, guys, and I will see you on Thursday. Cheers.